Hello, hello, hello. Happy CPI Wednesday already. Wednesday. How is everyone doing today? Good morning, Mark. Everything's jumbled up, Sterling. I'm going to have to try to piece it together. What I've found out is when comments starts coming in before I start the live stream, they get all jumbled, which is very frustrating, but I really appreciate you putting it in there. Good morning, Sterling. Good morning, Patrick. Sterling putting in our earnings and the CPI data. Let me scroll down. Earnings first. Now let me scroll all the way back up. There's BlackRock was a beat. Wells Fargo was a beat. Where else do we have? JP Morgan was a beat. So let's see. Then we have all the other. And for Goldman Sachs was a beat. So banks across the board beat. And Citigroup beat. There we go. I've pasted it all back together. Who else is here? Good morning, Eric. Good morning, Ted. Good morning, Tony. Good morning, John. So, by the way, so we had the market screaming up about over 1.5% for the S&P. We did get the percent beat buy follow through yesterday. Yesterday was a choppy day. We also got it on the Dow, and they're running higher. I'll go over my next targets. Hello. So the market's celebrating. Core inflation rate coming in slightly better than previous year over year back for core at 3.2 versus 3.3 expected. Now, my question is, this is why I got to trade technically, because 3.2 is way above 2%. So it missed consensus and is slightly down from previous. But look at the headline still. The headline up at 2.9, higher than 2.7. Does anybody remember what the last few were? Does anybody remember? 2.4 in September, 2.6 in October, 2.7 in November, 2.9 in December. Does that seem like inflation is going away? No. But the market's celebrating because core dropped year over year 0.1% from 3.3 to 3.2. So I know it's not worth celebrating, but remember, cycles were at the bottom. We are against key support. We had percent beat buys, which have now gone on screaming. So I'm being patient and waiting for cycles to get to a top again before looking for shorts because the market just wants to buy. The market still wants to buy any piece of good news. And this is not a strong report. I mean, you have other stuff. I'm just looking at my other screen here. I mean, you have car insurance up 11.3% year over year. Transportation inflation 7.3%. Car repair 6.2. Utility gas 4.9. Homeowner inflation 4.8. Rent inflation 4.3. Food away from home 3.6. Hospital services 3.5. You're not having stuff disappear. It seems like 3 is the new normal for inflation. So what are we celebrating, a 3% inflation rate? Think about that cumulatively over the last 4 years. And now pricing in more Fed cuts. But you got to trade what the market gives you, not what you think should happen. So, what's for the rest of the day? We have the Empire State Manufacturing Index, which came out also at negative 12.6. These numbers are just really weird. And we have the crude numbers coming up, and then we have a lot of Fed speak today, probably celebrating a 0.1 drop in core, which they ignore. Remember, didn't Powell say people still have to live with headline inflation, and headline inflation was doing better down at 2.4, but now headline inflation back to 2.9 year over year? But the market, buy it all. Buy it all. Just buy it all because core beat by 0.1. Buy it all. Everything green. Now, Fed Watch, based off the Fed Watch, we'll do it once more. And we'll look at the probabilities. This is down to a first cut in June. And then this has it a pause. But their odds are climbing that there could be one more cut at the end of the year. But this still has one more cut, just one cut priced in from the Fed Watch tool. But it's from September to June now. Yeah, 3% is the new normal until it's 4%. Good morning, Royal Palms. That is a lot of green. It's buy it all. So you want to bet Coco's going to pop in and say, see, NASDAQ 25K. I don't trust it yet, but we are at cycles bottoms. We did get some short-term buy signals yesterday. NASDAQ did not trigger it, by the way. Fear and greed, we're down by extreme fear, but this should definitely pop up today. The breadth still stinks. It's just buy it all. These are algos just buying everything based off of 0.1 beat. And Schiller PE still not cheap. We already went through, thanks to Sterling posting all the earnings. After the close today, there's not much. Tomorrow, there's TSMC, United Health, Goldman Sachs is actually today. I don't know why it's listed there tomorrow, but you got Bank of America, Morgan Stanley for tomorrow. I'm going to be paying attention to TSMC. And then really, for the rest of the week, there's not a lot of biggies. All right. So, did they change this? What did 58? Was I wrong? I thought, because I was looking at the final 4-hour print to trigger it for me, 58.82.25, 58.83. So technically it did not trigger based off the settlement. There's been some weird settlement marks recently, which has been bugging me. So I was wrong. This did not trigger in the S&P, but we followed through. My key thing on a continued rally, we still have the descending channel. And in the short term, not necessarily today, I am going to be paying attention to as selling comes in, mid-morning, especially after the European close. But in the short term, my target area is still 59.96, then roughly just in front of the 60.43. The very key area is about 60.28. So on a continued rally, that's really what I'm watching for. Remember, weekly cycles are headed up. We are in neutral mode on the weekly. That doesn't mean you can't rally. I'm being patient and at least watching for daily cycles to get to the top before aggressively looking for any short setups. Good morning, Dark Screen. What are my thoughts from LA wildfires? Is it from God? It's due to a lot of mismanagement across the board in California. So now, looking at this, on any pullback, there's very key support coming in about 59.50. So on any pullback, 59.50 is my area, about 59.40 to 59.50 on any pullback. That's what I'm watching. If we start breaking through 59.40, then it'll get interesting on the follow-through rally. But pay really close attention on the continued rally back to this 50% harmonic. The NASDAQ, also, of course, no percent beat by yesterday. Cycles at the bottom. The NASDAQ, the key level I'd be watching for if this does continue. Today, I'm watching right around about 21,400. Then if we get through there, not just for today, but over the next few days, it's 21,560. We are still technically in the rollover zone because we're not above here. Pay attention to this key close, though, from Tuesday the 7th, which is roughly around the highs from Friday the 10th. Pay attention to that today, which is 21,360 roughly. Jake took the wife out to eat for the first time in months, and the mall was crawling with people. Restaurants were packed, and people were waiting for 2 hours for a table. Where? I'm just wondering. I'm not surprised at that because people are still spending like no tomorrow. We'll take a look at uranium. Yes, long term. This is a long-term play for me, and it's trading around the core position. We'll take a look at uranium. Oh, good morning, Richard. You got cold fingers? What's the temperature there, Richard? The Dow falling through. Yesterday, percent beat buy coming through. Now the rotation zone. So my key target next is 43,800 on any follow through. Now the Dow might be topping first, but we on the daily, but we still have weekly. This could run for easily at least another week. Russell, look at this. It's literally, this is insane to me. But the next key target, if it can get through 2,300, is 2338. 2338. The VIX dropping after that CPI number. The DAX, which is screaming, went through the next target, 20,623. The DAX is celebrating like no tomorrow. I got to update this, by the way. I don't know how that got anchored. So if this breaks above your next target is 20,946. What would invalidate this potential? Remember, the double top still in play. You get up to that 20,950, the potential double top would be invalidated on the DAX. The notes, remember we were at cycle bottoms and oversold, as I said yesterday. I was expecting more of a sideways correction, but it looks like we're going to go the other way. And I'm keeping an eye on 108.16. With the yields, look, the yields pulling back. Now this is turning into a pullback correction. I'm paying attention to the bottom of the rotation zone because we're back down below 4.7. So I'm going to be looking at 4.6 to 4.65 for support and then see how it reacts in there. We have cycles rolling over out of very overbought condition. And on the weekly, so we could be into a pullback / weekly consolidation, weekly support back at 4.55. Thanks, Charles. UK CPI came at 0.3 for 0.4 expected. So 0.3, are they celebrating that in the UK? Because that's 3.6 annualized. Dollar index coming out of very overbought condition with a triple divergence. Again, the key level for me is this 108 level to watch to see how it reacts around there. On the weekly, the key support's back at about 107.50. Crude, still holding up. Now this, we barely got a pullback here. I'm going to see if this turns up and makes a topping pattern in the short term. Other than that, we're holding the 4-hour rotation zone. So the only thing that starts put me in more of a pullback mode is if we break below that 4-hour rotation zone or we make a double top and trigger it. Gold. Yesterday, pulling back to that key support level, 2670, right there, and now breaking above there. So I was watching yesterday's high, which we're holding above. The only thing in the short term, so this now is a rotation buy for me up. We have hit the 75 harmonic. 27, let me make sure, 20, not technically, we're a 0.3 away. We'll probably still hit that today. The only thing that would be from my then perspective is if we close back below the lows from Tuesday, this little bounce play would be over and I watch for the bigger pullback. But the target for me is to see if we can close above this 62.5, which we have not yet done, at 27.30. Let's just look at uranium real quick for Ken. Again, we've sat at the first target. We have not rolled over yet. So, from my perspective, we do have a double bottom. Would I be front running it yet? No. I'm still watching these same levels. They'd be 25.60 and 24.50. Now, the only way I'd be bullish in the short term, we've already got to that first target area, is if we triggered the double. So I'd need a close back above 30. Other than that, I'm watching for the continued pullback. Okay. 10-year yield in the yen just keeps climbing. The only yields are dropping now. What are the yields doing in the UK, Charles? Hey, why do you say Bitcoin's not a coin anymore? What's my thought on BlackRock's earnings? I mean, they're decent. What's more, they're very decent today, but I'm not watching. This is just a bounce pattern for me. Hold on, let me re-anchor this. This is just a bounce pattern for me. They're definitely decent. What we have to watch for, BlackRock's not cheap for a bank. It's corrected back into the just below the weekly rotation zone. So this, from a technical perspective, in order for me to get follow through on anything short-term bullish, this has to close above 1,030 again. And then the key target I'd be looking at is 1065. So on any, I mean, it's bouncing up on the gap, but it's got to follow through. For me, with a close above 1030 on any buy plays, it's trading right now against the key breakdown zone. The key breakdown zone from before, right around the 50% harmonic, 1012. And we're trading just below that. So this got to prove that it can sustain something above there. Otherwise, it's just a bounce play only. You think bank earnings are going to send the markets back to highs? I don't know if bank earnings can do it. You'd have to have some strong tech earnings. Remember, they're starting to come up over the next couple weeks. Thank you for that. 4.75. You're welcome, Sully. All right. Again, thank you for chiming in on the in the chat. Sterling's 30-year bond is oversold and set up for a percent B buy daily off the support from October. The other side of the daily rotation zone is around the high from last week. Could trigger a weekly percent B. And we could easily run, remember, PCE does not come out until the end of the month. We have the Fed meeting before that, but PCE, what the? I should add this to the list. I just don't watch the, there we go. Yeah, this could, what the target area for me would be about 113.10 on this period. And on the weekly, it'd be because that's going to close in on 114. It'd be about 114. So again, this I would not fade right now because, again, very oversold with some divergences down here. So not surprising, but this is not a long-term bottom. This is just going to be a little bounce play for me in the short term. The markets, you know what, until they can prove itself that they've formed a stronger term bottom, this is a bounce. What else do we have? The spiders. The spiders, which has not hit, remember, the first target. But the invalidation point on that still a close above 598.51. So we're a long way from that right now. But in the short term, the target's 592.21. The Qs, the first target is 514.90, which is right by the breakdown zone. If it gets through there, 519.42. Key support is right around 509.67. Bitcoin, the good old Bitcoin, which had a percent B buy yesterday, falling through. So the next target area for me is this 101, roughly 130. What else do we have? Let's take a look at, somebody mentioned Apple. Apple is not looking strong. It's got oversold. Would be watching for a bounce play, but Apple's going to be very telling. The rotation zone, you have the hooking over 50 and a gap left behind. Today on a rally in Apple, we still have a gap to the 236.85. If Apple rallies more, my key area would be around 241, around that area before another rollover play there, if it can even get that much. It did manage to close below key support. But Tesla, you still, even with this pullback move yesterday, you still have a potential double bottom in play. It needs 246.43 on a closing basis I mean 420, 246, 426.43. Dyslexia is kicking in. Again, you have a lot of stuff that does not look overly strong. It's getting bought today. I mean, Nvidia trying to hold key support, but I'm seeing how these react over the next couple of days if we get the rollover plays again to really judge this, or whether it's just a gut reaction to buy it all. Broadcom trying to hold key support. But again, Broadcom, if it rallies up to 34.75, would be a key target area for me. Meta, again, all these are bouncing. They're not breaking out yet to new highs. We'll see. I'm getting to some long-term buy signals that are probably coming up towards this longer-term buy signal resumption that are coming up to at the end of this month. So we'll keep an eye on that. A lot of the mega caps, yes, were bullish this morning, but they're not looking so bullish. I mean, they're in consolidation mode, but they're not looking. They're still in consolidation mode with even if all these moves higher. Let's just peek back to the S&P, then I got to wrap this up for today. So, speaking of yields, complete bloodbath in China's 30-year government bond yield. 310 basis points more. Very interesting. All right, let's take a look at the short-term stuff going in the open. So I'm really going to, it should be a strong tick opening today. Right now we're against a 5-minute rotation zone, but if we do drop it all into the open, 59.50 is still key for me on the first key pullback area. 59.50, if it doesn't go, if we take out the pre-market highs at 59.70, 59.80, 59.96, 59.97 is my first target area. All right, so that's where we sit right now. I shall talk to everyone later. Have a wonderful trading day. And remember, tomorrow on deck, we have, from an economic calendar point of view, we have retail sales, which are still supposed to drop a bit, but be still 0.6. And we have jobless claims. So keep that in mind pre-market tomorrow. And I will see everybody then. Bye for now. You are welcome, Eric. Goodbye for now.